Hey everybody, today is June 24th, and today I want to talk about the price of Bitcoin, and I want to talk about why we are technically not in a bear market yet, and why Bitcoin still has a chance of going higher to $100,000 and above by the end of this year. Now, before I begin this discussion, please read this disclaimer, and you can pause this video as you read it. Okay, so this chart is basically the weekly chart of the last 8 years, from 2013 to 2021, this year, right? Now, as you can see, I created this rectangle, and this rectangle basically highlights the fact that the moment Bitcoin enters a bear market, right? We saw one in 2014 and in 2018. So the question is, are we entering a bear market now, or is this just a mid-cycle pullback correction before we head up higher, right? Now, to analyze this, we gotta look closer and see what exactly is happening in the price action of the chart, right? So you see, Bitcoin has basically had this really great impulse move up, and then starts to pull back a bit, right? It tests the silver line, which is the weekly 50 simple moving average, right? We have a bounce once we hit this line because it's strong support. Then we come down and retest it again. We're not able to hold, and we break below. And this is important. We break below the 50 weekly moving average, right? And that's what signals the start of the bear market. Now this is 2014, right? Now this is 2018, right? We have another impulse move up, right? This next bull cycle ended up in a crash. And then we had a strong bounce off the 50 weekly moving average, again, the silver line, but unfortunately, we were unable to hold that, broke below. And when we broke below, we basically stayed below until we crashed even further, right? Deepening this bear market. But the common pattern is that we basically had a bounce, test this support level off the 50 weekly, and we were unable to hold it. And that's when we enter the bear market right here, right? And over here. We failed to hold this. We tried to break above, we got rejected, and basically stayed below the 50 before plunging even lower, right? And finding support on the 200 weekly, right? Which, by the way, has historically called the bottom over here. And of course, over here and over here. Now the question is, right now, we did come below the 50, but we did not we basically, when we went below, the buyers came in and pushed the price higher. So there's a lot of buyers coming in, and there's a lot of strong support, right? Well, I'll discuss this more later when I zoom in on the daily chart, but still looking at the macro, the weekly, the question is this going to enter a bear market and crash below the 50, or is this going to be the bottom of a mid-cycle pullback that continues higher, right? And so there's two scenarios that can happen. Either something like 2013 happens, in which we came up, pulled back, more than 50%. So this was actually worse than what we have now. This is an 80% pullback, right? But then we found a bottom, and came back up, and then pushed up even higher before entering a bear market, right? Or the second scenario is that we failed to hold the 50-day, or the 50 simple moving average on the weekly chart, which is this silver line, which we just plunged below recently, but we wicked back up, right? And we enter a bear market if that happens. So if we do follow a similar pattern in the past, we should see at least a temporary bounce higher, right? So if you're short-term trading, this could be a good trading opportunity. Of course, I'm not a financial advisor or licensed professional, so you have to make your own decisions. This is just entertainment and my own analysis, my own opinions. I don't copy my trades or anything, but we should at least see a temporary bounce. And then the important thing is, and the make or break moment is this thing going to continue up higher, find support and continue higher, and follow the path, the trajectory of the 2013 mid-cycle correction and continue up higher, and another impulse move higher before entering a bear market? Or are we going to bounce and fail to hold the 50-day, right? Because as the weekly price action develops and continues forward, this weekly 50 weekly moving average line, the silver line, is going to continue up higher. So this might bounce following a similar price action as the past we just discussed. If we fail to hold this and we break below, then for sure this will be entering a bear market. But for now, it's too early to tell because we need more weeks, more candles to print before we can come to a decisive conclusion as to whether this will enter a bear market, or whether this will be the bottom of a mid-cycle pullback and continue higher, like the middle of 2013, right here. But if we're just looking at things objectively from a technical analysis standpoint, we have to give benefit of the doubt to the bulls right now, because technically speaking, we found strong support, and
the bulls came in and pushed the price higher than the 50, and this is our crucial level, the 50 weekly, right? If we break below it, we're in a bear market. If we break below and close below and continue to be trapped below, then we're in a bear market. If we can bounce and continue higher like we did in mid 2013, then we have a chance of continuing higher and making another impulse move up to 100,000 and beyond, and this will end up in retrospect being a mid-cycle pullback, right? Mid-cycle correction. So, but in the meantime, based on what the chart is telling me, we have to give benefit of doubt to the bulls, and I continue to remain bullish until proven otherwise, until proven that we close the weekly below, and then I'll turn bearish, right? So that's just my stance on the technicals on the longer time frame. Now let's zoom in. Oh, and by the way, right now we're seeing a confluence of indicators. We're seeing the Fibonacci level, which held as strong support back in January, our first correction, right? And we're finding strong support right now, the Fibonacci line, right? And not only that, but we have the weekly 50 SMA over here coming up to not only act as strong support, right, but also to touch this Fibonacci support level. So we have two indicators coming together, and I like that because when we have two indicators, the more indicators we have basically confirming support or acting as support, that just makes the argument that we're finding a bottom a lot stronger than if we had just one indicator, right? You never want to rely on just one indicator. You want a confluence of different indicators that are coming together and supporting your thesis. So in my opinion, I am still bullish. I do believe this is just a mid-cycle correction that will continue up higher like we saw in 2013, right? And we made another impulse leg higher before entering a bear market. Now, of course, I am open to being wrong. As I said, if we don't hold the 50 line, we will likely continue down into a bear market, right? So now let's look at the daily chart. Obviously, we're still in this sideways trend. We just broke back above it, but we're still at the bottom of this trend, right? We still want to continue up higher, perhaps come down, find some support and push up, right? I've said in the past how important it is to stay above this blue line, which is the 200-day simple moving average, right? In our past bull run from 2015 to 2017, we always stayed above. We always stayed above the 200-day simple moving average, right? The blue line, right? We always stayed above this blue line. We did wick below, but we never closed below. So it's really important that we stay above the 200-day simple moving average, this blue line, right? We had a death cross over here that led to a plunge below, but the bulls came in and wicked this back up. So, but we need continuation, right? We need continuation. We need more buyers coming in, stronger volume to push this up higher, and break above into the 40,000 range and above, and move these moving averages back up to a more bullish posture, right? Instead of it crossing below, we want the 50-day, the silver line, to be at the top, followed by the gold line, and then the blue line at the bottom, right? MACD starting to fade a bit, but we want to see this thing push up higher. Hopefully this is just a temporary pullback, and we'll see more green histogram prints signaling more buying volume, right? We had some buying volume in the past 3 days, but we want to see more buyers, more conviction coming in, right? RSI still trending nicely up. However, we're still in the bigger picture, still making lower highs, right? Lower highs, and also on a MACD, still making lower highs. So we want to break this trend by having buyers step in, push up higher, move our oscillators up, higher lows, higher highs, and break this multi-month downtrend, right? Because again, we talked about this in previous videos. When our oscillators are coming down and the price is coming up, that's a bearish divergence, right? And it's going to put more downward pressure on the price of Bitcoin. But yeah, so that's our short term. We definitely want to see at least 40,000 hold. We want to see us come up, hold, maybe pull back, hold 35,000, but 40,000 is a key level, right? Because that's right about where the 200-day moving average is, just a little above 40,000. But we need to see us come up, break above this range, stay above the 200-day, the blue line, and continue up higher, right? So that's the short to medium term at Bitcoin. It's good that buyers are coming in, but we need more conviction from the buyers to push the price higher, right? So I talked about in my previous video how this is the monthly chart. We're following, I believe that, just to add to my thesis, that we could be following the similar price action as mid-cycle correction in 2013, right?
my last post I talked about how we had 6 green monthly candles followed by 2 red candles, and then another green candle which wicked below the previous 2 candles before continuing up higher, right? I think something similar is happening right now, right? 6 consecutive green candles, 2 red candles, and then a red candle that's wicking below. However, this red candle hasn't closed yet. The month is still not over. So if bulls come in and push the price higher, we have a green candle similar to this candle, green candle that actually wicked below these previous 2 red candles. I do believe this will give us more momentum to have another impulse move higher above 100,000, right? Before, of course, going into the bear market. And if the 4-year cycle is true, we should see something similar to what we've seen in the past, right? Where we have bear market here crossing over, and then 3 years finding a bottom, and then 2 years of up, right? Bear market finding a bottom, 2 years up. This should be a mid-cycle correction if the 4-year cycle is true. And going back to the original chart that we started this video with, other reasons that I believe that this is similar to the 2013 mid-cycle correction rather than us entering a bear market like 2014 or 2018 is that we can look at all the indicators right now, right? Other indicators, the 2-year multiplier, right? We've seen in the past that when we enter a bear market, it's usually after we've become very overbought, right? When we went above this orange line into orange/red shaded area, that usually marked the peak of the bull cycle, right? Even in the mid-cycle correction, we actually went above, but this time we didn't go above. We found a ceiling right at the peak at the range high of this channel, right? Around 60,000. And now we're coming down below, and we're pretty much in the middle of this channel. We haven't even peaked up our head above. And the more we range sideways within this channel, the more this channel is going to continue up higher, right? And right now, the ceiling is at 95,000. And we know that in the past, when we reached the top of our previous bull cycles, we've overshot, right? So we should go above 95,000 at the bare minimum, right? And there's still a lot of room to the upside. So as Bitcoin finds support and continues higher, this channel ceiling is going to continue up even higher to above 100,000. And so when we overshoot, that could take us to above 200,000, maybe 300,000. So who knows? Basically, the point I'm trying to make is that there's still a lot of room to the upside, right? This is not overbought by any means compared to historical peaks, right, in the past of the previous bull cycles. Same thing with the Pi cycle top indicator. Pi cycle top indicator did a great job calling the top within 2 days of this correction back in April. Of course, I was hopeful that this would be a false positive. I was wrong, right? I'll admit that I was wrong, and I should have listened to this indicator. The reason why I was a bit skeptical was this indicator was created in April 2019, and I'll create another video in the next video getting more into detail, but just to summarize, we didn't know if this could predict the future, but now it can predict the future. So if what's happening in Bitcoin ends up following like 2013 where we have 2 peaks, another impulse move higher, I'll definitely be using the Pi cycle top indicator as one of my main indicators to help signal an exit, right? But again, getting back to this, it does seem like we're following a similar pattern as 2013, right? And actually, right now the lines are actually positioned in a bullish manner, right? With the green line above the orange line. When this crosses with the orange line above the green line, that's usually when you want to sell, right? But now that the green line is above the orange line, like we saw in 2013, right? If we can get the price above the lines, this could be a good entry point. Right now we're still below, but the longer we stay below, the more diverging that these 2 lines are going to be. And then when we finally cross above, that's going to give us more time for the price to go up higher before it crosses back into a bearish pattern, right? So just like how we're resetting the ceiling to go up higher and giving us more headroom to go up higher and push the price above to overbought territory. Same thing with the Pi cycle top indicator, right? Giving us more headroom to go up even higher when this signals overbought. Pull multiplier, as you can see in the previous bull cycle tops, this thing spiked into the orange range. We haven't even touched within the orange range yet. So, I mean, this is looking a lot like not only like the mid cycle of 2017, but even worse, right? Even looking sort of like in 2012, right? So the point is that there's so much room to the upside. We haven't even signaled overbought yet, right? Not overbought yet. So
so much room to the upside. Even Z-score, right? Look at how we spiked above this orange slash red or red shaded area, right? We haven't even broken into the shaded area, let alone like surpassed it, right? So in my opinion, we're still like, there's still a lot of room to the upside, right? There's nothing on these indicators that's telling us that we are overbought and that this is the top, right? And there's so much bearishness on Twitter and Reddit right now, from people who are supposed to be like experienced traders. And look at this. The golden ratio multiplier is getting to the bottom channel, right? And usually when we peak at the top, it touches these dotted lines, right? We haven't even haven't formed the dotted line yet, let alone touched it, you know? So yeah, there's just so much that's telling us that there's more room to the upside, right? Even with the stock to flow model. So this is my whole thing. Like, I believe Bitcoin just went up too quickly compared to the past, right? If you can see, like, we actually touched this red line a lot sooner than we did in our last cycle, right? We stayed below it before we broke above. Now, when we break above this red line after it becomes flat, that's usually telling us that that's where the exit signal is, right? When it becomes very overbought. However, we basically touched this red line a little too soon, and that's why I think we're seeing such a strong pullback. But if we do follow the previous two cycles where we went above the red line, right, for an extended period, this overbought territory could take us all the way up to 2, maybe 300,000, maybe even more. Who knows? You know, who knows how long? The longer we stay sideways, the more energy and momentum that we can build, like a spring that's ready to explode, right? Pushing the price higher. And lastly, let's look at the fear and greed indicator at 22, historically low, right? Last time we were this low was during the pandemic, and we know what happened since the pandemic, right? In March, we know how high Bitcoin has gone. So basically, all I'm saying with all these indicators that we just went through, right? All these indicators, they're telling us that there's so much room to the upside, right? Nothing is telling us that this is overbought, right? Even on a macro level, right? So just to summarize, I do think that Bitcoin can still hit $100,000 by the end of this year, 2021. And based on the chart, based on what I said, as long as we stay above the silver line, which is the weekly 50 simple moving average, as long as we close above this line, we are technically still in a bull market. We still have to give benefit of the doubt to the bulls, right? Because in the past, we could say for certain that we were in a bear market when we closed below this line, right? Or over here and over here. Now, of course, if we do follow a similar pattern, just to summarize what I said earlier in this video, we should see a short-term bounce like over here. And then we'll retest this and see if we can hold it, right? Short-term bounce, see if we can test and we can hold it. These last 2 times we didn't hold it. But we should see a nice bounce, and we'll see if we can hold this line, the silver line, and continue higher, or if we will break below and continue on lower, right? Now, if we do break below this line, right, as it over time it's gonna move up higher, right? If we bounce up and we don't hold this line, then yes, I will turn bearish. I have no problem admitting that I'm wrong if the technicals tell me. But right now, based on historical data, based on historical price action, this chart is not telling me that we're in a bear market, right? This to me looks more like the mid-cycle top, mid-cycle correction, like 2013 before another impulse move higher, right? And that's basically where I stand right now. My position is that we are still not in a bear market until proven otherwise. And as long as we close above this 50 simple moving average on the weekly chart, the silver line, we have to give benefit of the doubt to the bulls. I know I've said that many times, but there's so much fear. I know I'm repeating myself a lot, but there's so much fear right now in the crypto markets. Even the strong bulls, the influencers on crypto Twitter are turning bearish. So, you know, I need to put my foot on the ground and tell you that this is just my opinion, you know, based on what the chart is telling me. So, but we still need to see, like I said, that this is not 100%. You know, we're probably gonna see a bounce, but we need to hold the silver line as it continues higher, right? If we break below, then of course in a bear market, but we still need to wait a couple weeks to see how this plays out, and I'll definitely update you guys as the price action develops, and we'll see if this bounce that could be coming will continue higher, or whether we're going to fail to hold the 50 simple moving average on the weekly chart and continue on lower. Thank you for watching this video. If you found it useful, helpful, informative, don't forget to like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.